Rightmove are reporting that the rise in house prices between December and January was the highest on record. Average house prices rose by about £10,000 from one month to the other. And at the same time, they're saying that the interest rates on mortgages were as low as they've been for quite a few years. And so there's clearly a connection between those two things. We've known for a long time that house prices do largely reflect affordability. And of course, interest rates on mortgages are a big factor in affordability. The system is sort of designed to extract as much money as possible from people buying houses. So house prices effectively arrive, if you like, at the level that is the maximum that people can afford. So who is winning? Who's gaining from these higher house prices? Well, you might say, well, house owners are gaining, but that's really not the case, because clearly as a first-time buyer, you want house prices to be as low as possible at the time that you purchase. And you might think, well, after that, I want them to rise. But actually, if you think that through, it's not logical, because probably as a first-time buyer, you've got aspirations a few years down the line of buying a more expensive house, or a bigger house at least. And that bigger house is going to be more expensive. And the difference in price, if the bigger house, is always going to be more than the extra you get on the house you've currently got when you trade up. I mean, that's the way it works. If house prices are rising, the more expensive house price will rise more than the less expensive one will rise in real terms. So you've got to borrow more money to trade up the ladder, so to speak. And that's the situation for the majority of people. Majority of people will be moving up the housing ladder rather than in the other direction. But even if you are down trading, even if you're, for example, selling your house to buy a smaller one so you can share the proceeds with your children or grandchildren to help them get on the housing ladder, which is quite commonly the case, well, even then, of course, the amount extra that you get when you sell your house for a higher price is offset by the amount extra that those children or grandchildren will have to pay when they buy their houses, not to mention what you've got to pay to buy the house to replace the one that you've sold. So all in all, when money stays in the housing market, as it tends to do, higher house prices do not benefit homeowners. So who do they benefit? Well, they benefit, obviously, investors, people who buy houses to rent, who've got quite a few houses, for whom the capital value is part of the investment value. But more importantly, they benefit lenders, because those lower interest rates are offset by higher prices. And that takes us to this image here, which is the state of bank lending in the UK and where that money goes. And what we've got here in this big red section is bank lending into the property market, which is mostly the housing market. So banks are lending most of the money at their disposal into the housing market, and that's really having an effect on the rest of the economy. The other big bit here, the pink bit, is actually lending to financial services, which is also not terribly productive. But lending to the real economy, lending to the economy of making and doing useful things, that's here in this bit here, in the greeny blue bit, and that's relatively small. And the last little bit here is lending to individuals, that's personal loans and that sort of thing. So you can see that fundamentally high house prices have a big bearing on the lending and therefore the profits that the banks can make. So when we ask ourselves, are high house prices a good thing or a bad thing, rising house prices, we need to say, well, they're great for lenders. They're great for the people who are lending us the money. They're not so good for ordinary people on the housing ladder who are trading up or whose children or grandchildren want to get onto the housing ladder. They are pretty good for people who are owning houses as investments, of course. And we haven't even talked about people who are renting, because rents tend, broadly speaking, to follow house prices. So higher house prices in general terms are going to have an effect on people who are renting too. And this is all important to bear in mind, because higher house prices are often presented in the press as a good news story. And clearly they're not. They're not really a good news story for anybody apart from investors and lenders. They're just not a good news story for ordinary people who just want to own a home.